What's going on, YouTube? This is Dave's Daily Trades, where I bring you daily AMC technical analysis, price predictions, and, of course, the latest craze news. In today's video, we're going to be taking a quick look at the DTCC Bank Holiday Charge collections. We're also going to be taking a look at the DTC Collateral haircuts, which is expected to take place on Monday, and already the potential risks that are coming out into the market. We'll be looking at Adam Aron's potentially secret message in the CNBC interview, and then also briefly discussing the earnings report for AMC and what to expect for this. But without further ado, we're going to roll right into the intro and then hop into the quick technical analysis. All right, and I just want to take a quick look at the technical setup for AMC. So I have two charts pulled up here, both of which consist of AMC. On the left-hand side, right over here, if you don't know your lefts and rights, we have early May until just about like middle of May, May 14th, call it, and currently where we sit present day with AMC. Now, of course, there are some similarities that overlap here, as just about everyone has been discussing, but I just want to show you my take and what I believe next week is truly going to look like. So really the biggest thing is if we look and analyze the early May setup, what we did is we bottomed out at this area of 843. And that is very similar to this level here at just about $34.62, where we did have a, call it a double bottom here over here on the 27th and of course on Friday. And then Friday we had that massive green candle, which is very similar to what we saw on 5-6. We had that massive candle that moved up, let's see here, 5.79%. And just funny enough, on Friday, this one candle here on the 1 hour chart was 5.31%. So very, very similar. Now, what happens next? Well, we start to see, big spike or decent sized spike, a little bit of pullback, consolidation, and then a move up, consolidation, move up, consolidation, move up. And that is truly the pattern that I believe is going to start playing out next week. Of course, the reason being, well, volatility is certainly going to spike, which is why you're going to have this massive or pretty decent size upward and downward pressure, consolidation right before we do have massive moves up. And typically, these massive moves start just about in the first couple, 30, 45 minutes of the trading day. So that's exactly what I'm be looking for. So I think we're going to truly see, and I'll draw this out for you guys, something that goes just like this. Let me just grab my trend line, and we're going to start moving to the upper side of this wedge over here. Now that is exactly how I imagine next week to start playing up. The biggest thing is Monday. Monday, this 3611 area has been a heavy resistance line for us for the past couple of trading days. Of course, we have bounced off this line once and again on Friday. So breaking through that and breaking back into this wedge shape flag pattern that's been playing out for the past 6 months, that is really step one. Once we can do that, consolidate a little in this area, we're going to start to see these upward spikes followed by small downward movements, consolidation, big spike. And that's the pattern that I truly believe is going to start playing out next week, guys. So we'll see what next week brings, but I truly believe exactly what I said is going to play out, and we'll see how accurate that stands. All right, guys, the DTCC came out with this important notice on 10/28 just 2 days ago, and it was officially released on Thursday. So we're going to just dive into exactly what this is. Anyways, Thursday, November 11th is a bank holiday, which is Veterans Day. We know of that, where U.S. banks are closed and the U.S. equity markets remain open. The NSCC will be presented with increased exposure due to one additional day of trading positions held in members' portfolios. What are they going to do? Well, to address this, the increased exposure, NSCC will collect an additional 20%, guys, of each members' start of day volatility charge on Wednesday, November 10th, ahead of Veterans Day on Thursday, which of course is just coming out in 2 weeks. Well, just about a week and a half. This additional requirement will be added to each member's requirement after the morning clearing fund collection. Any deficit resulting from the additional clearing fund requirement must be satisfied within 90 minutes notice. Just an hour and a half, guys. So, of course, the big question is, before we jump into the collateral haircuts, is where the hell are they going to get this additional 20%? Of course, we already know that the risks that are going on in the overall market, and a lot of firms are really strapped right now. And of course, we'll dive into a lot of that information as this video progresses. But as we're talking about this, we're also just going to briefly discuss the collateral haircuts, which we did discuss in an earlier video sometime, I believe it was either Tuesday or Wednesday. But what exactly is this? Well, to sum it up really quick, right now for your margins, you do post collateral for that. So a lot of the collateral right now are junkier bonds. So we're talking double Bs, triple Bs, and all of that stuff. But now the DTC is coming out and saying to post that collateral for those margin accounts, you're going to need either AA or AAA related bonds and securities to post it. Meaning, if you don't have those for your collateral, well, we're just not going to accept it because you are going to receive a 100% haircut on this, guys. If we're talking real haircuts, yeah, you're going freaking bald on this. So this is absolutely really huge because we do know that a lot of securities out there are not AAA or AA rated. And if we really just kind of put a little bit more thought into this, I think that this is more planning of the times that are about to come. Of course, we did discuss the inflation, how it's just been going absolutely through the roof lately, and also the tapering talks that the Fed should be discussing on Wednesday of next week. So because of that, expect a fairly rocky market for the most part until that Wednesday meeting comes and Jerome Powell says something to ease the market or potentially to send the market down further. So we'll definitely be posted on that, and Wednesday we'll know a lot more about this. But getting back to an earlier point that we were just talking about is they want to make sure for these margin accounts that you do have very secure bonds and stocks in that portfolio for your collateral. If it's not AA or AAA, it's just not going to work. Meaning they may be expecting some defaults on the horizon. And we're actually going to jump into a quick article that goes over all of this stuff. But really seems to me that they're preparing for a lot more, and especially with all of these new rules and regulations coming out the past couple of weeks. And anyways, we're going to jump over to Charles Gasparino's latest tweet. I know. I personally don't like the guy. I know a lot of you guys really hate this guy. And of course, the AMC community has gone on a blocking spree for him for the past couple of days. And his followers, absolutely short on his follower count. I'll tell you that for the most part. But anyways, he came out with a tweet yesterday afternoon, and it said just this. Jitters in the markets over inflation and the Fed's tapering has some hedge funds suffering major losses. My sources tell me. Could this be another Archegos? We'll discuss now. And he went on live Fox Business with Liz Klanman. I probably butchered that name. Apologies, Liz, on that one. But, you know, his sources, don't know how well his sources are backed up. And, of course, it's Charles Gasparino, so we do have to take literally everything he says with a grain of salt. But for me, I could not ignore this because especially how we talk about the collateral haircuts and then also the holiday collection charge as well. I mean, add this on top of it with inflation, with the tapering. Well, of course, there potentially are some of the, I believe, the smaller hedge funds that are really just taking on water that they shouldn't be taking on right now because of just everything happening right now. So that's exactly why I want to discuss that. But I really believe that Monday, Tuesday, and throughout half the day on Wednesday until Jerome Powell comes out and talks about this stuff, the market is going to be extremely volatile. Definitely keep an eye on the VIX, guys. We definitely want to see what goes on with that to really see how the risk in the market is being kind of perceived by institutional investors and retail at the same time. So that's what we're definitely going to be looking at for Monday. And of course, like I said, Wednesday, we should see a little bit of things settle down. Or, of course, depending on what Jerome Powell says there. But anyways, I do just want to briefly discuss the CNBC video that came out, kind of describing the whole backstory of what happened in the story of the apes. Now, I'm kind of mixed on it. I think a lot of the facts and the data that came out, it really wasn't 100% accurate. And of course, the guy leading this article who, did all the documentary, whatever stuff behind this, well, he was definitely swayed in one perception of the MOAS will never happen. But as we know, we have enough conviction to truly believe what is about to happen for AMC, and it looks freaking beautiful. So I would take that video with a grain of salt, but more on the positive side with it is it's just exposure. I mean, seeing that it had 50,000 views on YouTube, probably was posted somewhere on CNBC's website as well. It just tells even a little bit of the story of what we're doing, why we're fighting. And I think no matter what, it's good press, guys. It's getting our word out to people who have no idea who the apes are, why they're backing AMC and GameStop. And I think that exposure is just going to help us in the long term, no matter what. But something I found extremely funny in that post was Adam Aron. Of course, he did go live with trades probably 4 or 5 months ago, somewhere around that time frame. And as we remember, he dropped his shorts. Now, he was actually asked a question of, was this staged? What was your intentions behind this? And I just want to play this out for you guys.
Message. People were wondering if there was a hidden message that my shorts were exposed. I'm never going to tell you whether it was planned or not.
I mean, there you go. It right from Adam Aron's mouth right there. And truly, I mean, his not saying anything about it, not going to tell you if it was planned or not. Obviously, it was 100% planned. I mean, you don't get Adam Aron over here just showing his shorts on Trey's Trades YouTube channel for nothing. I think that was a hidden message, personally. I mean, conspiracy theories, whatever, doesn't matter. But I think it was truly a message to the apes that he knows exactly what is going on behind the scenes. And just some other things that I was talking about, just about AMC's valuation, is really just showing that, he has to do some things on his end, such as accepting cryptocurrencies, making some type of NFT network, and really just changing the AMC theaters as a whole company, still doing movies, but moving over into bigger, better, more modern marketplaces for individuals like you and I. So, of course, he has discussed this in the back end, and we should hear more about his mastermind plan in the next upcoming days or weeks. So, definitely going to be keeping an eye on Adam Aron, and big things to come, guys. Really big things to come. Now, one thing is, I've been seeing a lot of dates thrown around for earnings, but AMC itself hasn't come out and actually announced the true earnings date. Of course, online, if you just do a quick search, you'll see it is for November 1st, which is Monday, but AMC has actually not come out and confirmed that. And then other dates throwing out, I believe, was like November 9th, but just wait for the Investors app to give us an update, and then we will go from there. But as we talk about earnings, On-User Whales came out and said AMC's estimated revenue at $768.6 million versus $119.5 million last year, a 543% increase. And really, that's awesome to hear, guys. We love hearing that AMC fundamentally is doing really good. But more on the other side is you really need to just take a step back and pat yourselves all on the back, because if it wasn't for us, I truly believe that AMC would have been bankrupt at this time. And, I've been going to AMC theaters since I was a young kid, bringing my first girlfriend back in middle school to an AMC theaters. That's just good times. So from the bottom of my heart, thank you all, because AMC is a great company. But I think this movement really did a lot more than just, pumping up the price and really going for this mother of all short squeezes. I think it did so much more, guys. We really saved this movie theater. And by going to the movies, by telling our friends, by, everything, all the posts, all the hype around it. And this is exactly why we're seeing a 543% increase in movie ticket sales just from a year ago. So that's just absolutely awesome. And you guys are the reason why AMC is still here, still fighting, and still trying to, make a comeback and change the movie theater industry for the years to come. So that's awesome to hear. But with that said, guys, that's all I have for the weekend. Hope you all have a happy Halloween weekend. Be sure to stay safe out there, but still party hard. You know the deal. Peace out. Tune in for the next one.